Buddy, happy Wednesday. Welcome back. Final hour session just after 3 p.m. Eastern Time, June 4th. Pretty quiet day overall. We had a slight gap higher. ISM services number came out. Slightly disappointed. Market just filled the gap, came right back up. We are literally about 10 to 11 points off of the close yesterday and only 3 points off of the open today. So overall, pretty quiet. This SPX 6000 handle is still just sitting there ripe for the touching. Let's see if we make a little melt up there for tomorrow or Friday prior to non-farm. Not a lot of news on Thursday other than unemployment claims. But let's get into it, shall we? So trying to keep things pretty clean, looking for opportunities. I was actually put on a pending order today on Lululemon, put on a pending order on Oracle. I'm looking for a couple of other ones as well. Let's go FSLR. It's First Solar. See what their fundamentals look like. Pretty good snowflake analysis. 13.5 price to earnings, fair value. All right. Little FSLR. So big surge off the lows, 119. We're trading at 160 right now. That actually might be a good looking trade. IV rank at 45.6. Let's go FSLR. This one actually might be take a trade versus a pending order. We got some strong support back in 2023. Just taking a look at the chart here on my other screen, FSLR. So we had a nice little pop from 121 up to 200 and have pulled back. I'm going to look for a little ratio spread here, see if I can get something like the 120 or 115. I would use some capital to hold it. Fundamentally, this is what I was talking about. So fair value 246, price to earnings 13.5 times earnings. Compared to On Semiconductor, compared to some of the peers, not super expensive. It really just depends on the premium. So IV rank is decent. I'd ratio spread on like a 120 by 115. Let's go out to, we have earnings on the 29th. Maybe I can get out of this before the 29th, which would be the 18th, 44 days out. Is the premium decent? 120 by 115. Okay, if I went out further, let's go August 15th, 120 by 115, 181. That's a little bit better. We'd have to have a pretty awful, disappointing earnings season to get back down to like 115. So 181 is not bad income. If I were to move this down, increase the probability of profit, get about $1.20. If I want to take right now, this would probably be the trade. I would not mind owning the shares if I needed to flip it. What would that cost me? At the monies can give me about $10 to $11 in credit if I needed to repair this thing. So let's go July. Actually, let's go August 15. A 120 by 115 for about $1.70, $1.75 out 72 days. I wish I had a better expiration, like 50 to 60 days, but that's all I'm after. Earnings out this week. Yeah, I know, Tony. I've got a trade pending on that one. I put in this morning. It's just pending, though. It's likely not going to get filled. Earnings is tomorrow aftermarket. So I put in like an expected move on AVGO. So we're trading at 260. I went up to sell like the 280, 285. I'm looking at a broken wing butterfly. So if we have like a pop on earnings and I can get filled and then fade, I'm trying to get like a profit trap of like $1. It may not fill. If I'm not sure what happens here. We have most of the time AVGO earnings is less than 10%. Like literally, we're talking like maybe 2 to 6%. I was going up high enough where I could stomach about a 9 to 10% move before I take in any risk. So we could go up around 9 or 10%, which puts me around 280 to 285. That was my pin price, was 285. Give me a second. Somebody in my Discord talking about a debit spread, credit spread. What you talking about? Let me find out. Where was that at? Trading chat. Saw your latest update, IG.com. Seeing it is it a debit spread. So let me see the trade I just put out. If it is a It's a bull put spread, right? We're talking Discord, new trade, 58. Oh, my bad. Yeah, I just typed the numbers incorrect. It's 59.95. So let me see where that chat was. Where'd that chat go? Darn it. Let me look and see where that chat was. Trading chat? There it is. 59.95 by 5990. So now in the indexes, that's actually, gosh darn it, it's 58.95 by 58.90. So I'm quite a bit lower on that trade. So let me update that in the chat. So it's 58.95 by 58.90. Okay, so that's fixed. Do you see the Qs going to new highs? I mean, that's literally why I posted the question in my Telegram channel yesterday. Still want to see how many votes we've got going in. I didn't close this poll yet. We got about 98 votes. Feel free to jump into my Telegram and post, cast your vote. All-time highs or U.S.-China trade agreement gap, which is about 3 to 4% lower than current prices. At this rate, I think the easiest way to look at this chart is take your April 7 lows. Let me go to the slightly higher time frame here. Let's go 30-minute chart. Okay. Take your April 7 lows. So right here, April 7 lows, connect it to your April 21 pullback on a Monday. And we have some support over here, some support over here. I mean, it's close, right? I mean, all-time highs are within about 3% between the S&P and the Nasdaq, only about 3% away, less than 3% to get to all-time highs. So obviously, it's a lot closer to getting up to these highs than it is coming back to fill this gap. Now that we look at the difference in percentages, to just melt up just a tiny bit higher, we'd be about 2.71% on the S&P, and we'd fill this gap around 5% lower. So it's, is it easier for the market to kind of stretch and melt up another 3%, or is it going to get on the right-hand side of the trend line? I said this morning. I think this is disappointing either way, because if this market melts up, you're going to have all these investors that feel like they missed out on most of this rally to get back to all-time highs. So that's an angry crowd. The other side of this trade is everyone that's been buying this area to get the melt up to all-time highs, and all of a sudden it disappoints and goes back to fill this gap. That's going to be an angry crowd. So I think the best part is not everyone's going to be happy. But I'm looking at this trend line, and look, I think we have to just see what price is going to do, because if we go sideways, the bears have all the confirmation to break, right? If they are going to, like tomorrow is, literally enough time to get us on the right side of this trend line. Are we going up again to try to get to, 6,000? We're going to try to get up to 6,100 by Friday with non-farm. Is non-farm good? Maybe, maybe not. I would just say that if we do go up, then obviously it's looking better and better to hit all-time highs. If we are going sideways, this market could then roll over on itself, or we can go one day up, hit the backside of this trend line, and then come into a pretty nice sell streak over the next maybe 1 or 2 weeks. So, I mean, hitting all-time highs doesn't mean that we sustain all-time highs. Hitting all-time highs means congratulations, you had a self-inflicted stupid correction that everyone, if you bought the dip, you got paid out really, really well, right? I mean, the profits that were generated from the courageous buy into about this area were pretty darn good. I mean, a lot of things went up. We've got, some stocks that have ripped up 60, 70, 80%. And there were just a lot of gains, like directional, there was a lot of gains. This has been a lack of direction, but the market is still just trying to go higher. So I would say until we breach these highs, or until the bears just have enough time to roll this thing on the right hand side of the trend line and start to take out lows, there's not a bear trade. And that's the scary part is, a little bit higher, a little bit higher. That still doesn't mean bears, right? Bears to me is we've got to get on the right hand side of the trend line and then see a flush lower. Okay, that to me means okay, now we can start coming back, right? So same in the SPX and the Nasdaq look very similar. The Dow has like 5-6% to go higher. S&P and Nasdaq only about 3% to go higher. So until, I mean, and we'll know this by probably Friday. If we're on the right hand side of this trend line, I wouldn't be shocked to see the market either roll over or test the high and then fade. We actually saw that trend line break similar, like this. If we go back a couple of previous corrections, take a look at this, right? We break, we retest, and we roll over, right? You can draw a trend line here as well. We break, we retest, and we roll over. See what I'm saying? So whether you had a connected dot from these lows, break, retest, go, right? Or this level, break, retest, go. So that's what I could see happening here. But price will ultimately kind of lead the way. And are we going to see just a continued? I mean, look today. I mean, today is freaking nothing, man. 0.14 in the S&P, 0.40 in the Qs. I mean, it's just a couple points higher on the day. And most of that was a bit of a gap. We came back to fill that gap. The Dow is flat on the day. IWM is down on the day. Volatility is flat on the day. Dollar is down. Actually, weakest currency is the U.S. dollar today. So dollar pretty weak. Japanese yen, Swiss. These are safe haven flows, which I think is interesting that the stock market is not responding to that at all. Bonds. We actually have TLT up on the day. So 20 years up about 1.61%. That's a pretty good squeeze. I have a diagonal spread with a sell call at 89. I've just got a chart alarm set there. I'm trying to get rid of my positions on TLT. I've got plenty of time. Every 30 to 45 days, every 30 to 60 days, I'm selling a call against my long. I think it's a 65 by 89 right now. Let me double check that on TLT. So TLT. 65 by 89. So I can make, up to $24 on the diagonal spread, and my break even is somewhere in the teens, I believe. Let me confirm my break even here. So TLT, my break even is 85.30 is my price break even. My debit is 20.30. So if I get it called away, I've got 89 minus 65 is 24 minus 20.30. I make 370 on however many contracts this is, probably over 20 contracts. That's 8, 12, 14, 16, 26, 30. I've got 30 contracts. So if I get it called away 89, I'm making 11,000 on TLT. It's income, and I'm probably done. I don't really care about holding a position in TLT. I'd rather hold a position in GLD or SLV, trade futures on gold and silver, trade more Bitcoin. I would rather get rid of TLT. I think that the trouble ahead, and possibly the trouble for the markets, but if there's some consequences coming on the dollar, if we're going to see weaker dollar, and we're going to see a weaker bond, and we see Treasury yields like sticky to potentially rising. I mean that's why bonds are up today. It's like yields have dropped a decent amount. You look at the yields. Let's go to 10-year. I mean 10 years down 2% today. 20 years down 1.9%, 2 years down 2% today. Now, are they back to Liberation Day levels? Not even close. There's still another 25 basis points to go. Are we going to go higher highs and higher lows and just kind of slowly melt up? The one thing we keep talking about on these yields is it's not necessarily the percentage that we're at on the yields, even though that's not pleasant to be at 5% on the 10-year yield. It's the rate of change. The reason why this was so disruptive back during April 7th through the 9th is because this was one of the largest single swing moves that's ever happened in the bond market. That essentially was a basis trade blowing up, where hedge funds that trade bonds and leverage in futures, they kind of got caught on the wrong side of that move because it just went so wild. And that is all of a sudden like liquidity changed, and there's the move out of the US dollar, and there's outflows, and it just was really messy there for a couple of days, which is why I think that Trump and co pivoted so hard April 9th. But I just think that now we're just kind of watching yields do whatever they're going to do. They could possibly keep making higher highs and higher lows. Would yields going down be a good thing? Well, obviously for the consumers, yes, yields going down would be a good thing, but that means that bonds are going up. If bonds are going up, are they acting as the opposite safe haven as the equities market, right? I mean, if yields go down, bonds go up. So that might help the bond investor, maybe. I'm just not a big believer that TLT is going to be this awesome trade. I think there's maybe some scalping opportunities, but like I said, I'm actively trying to get rid of my TLT. STX new highs. I don't know. I mean, do you know why? Seagate. Is this the same company that makes external hard drives? This thing is up 100% since April 7th lows. Good Lord. Let's see if there's any news on it. Raise price target for Seagate to 155. Well, there's part of the reason we're jumping. Um, that's about all I see. Chewy's in the headlines. Oh my gosh, man. Man, I own Chewy back here at like 20 bucks. Oh well. If you love your pets, you gotta love some Chewy. I don't have any Chewy left. I dumped it for a pretty good position. I had like a $17 break even, let go of it around $37. 37 $38. I put on some covered calls. So I mean I effectively let it go around 40 bucks, which was fine. I mean, we hit 40, pulled back to 30, now we're back up to 47. Overall, whatever. It's a good trade. So STX, I mean, I don't know. That's what the market makes you do. It makes you feel like an idiot that you can't find these stocks. Like, why wasn't I in Seagate? I mean, the last time I looked at this stock was never. So it's just this. Look, wherever this is, if this is up 100%, it's only a $27 billion market cap. So it's not like it's going to move the needle on the S&P or the Nasdaq, but it's still nice to see that stocks are going higher. And we'll see. But somebody knows something, or there's some pretty big momentum behind it. Yeah, I just think it's a heck of a move. And honestly, you look at how it traded. It's like, how would you trade that? Unless this was on your radar. I mean, even looking over here, bear market lows around 50 bucks. That's a great trade and really solid technicals. We didn't get there. Even with the drop in April, we didn't get down to a strong support level. So even if I had the stock on my radar, I probably would not have taken a trade. Or if I was selling premium, I would have sold my premium down here, and in the first 30 to 45 days of this turn, I would have been out in profit. So I would not have participated in this crazy 100% move. So it is what it is. But why? I don't know. Price target got raised. Fundamentally, is it still looking way higher? Non-cash earnings, debt not well covered. I mean, there's some risk to it. Price to earnings, price to sales, not terribly expensive, overpriced at this point. So I would think a pullback is coming. So not interested in buying highs. That's easy summary there. Okay. So anyway, bonds are up, yields are down. Overall, let's check the heat map for the day. I mentioned in my thumbnail, finding trades is easy, and I will show that here in just a little bit. I took some more trades here with my pinch point scanner. We are sitting on, I think, 14 trades. Nope, I got to update the numbers here. I've got 13 trades running live right now. So since I launched the pinch point scanner last week, I have 13 trades running live. And I've got take profits in, so they're kind of on autopilot, just looking at a pretty simple profit target, and just let the pinches and the coils and the consolidation, let the markets do its thing, and hopefully we'll see some profit targets here rolling in. It'd be a nice little windfall of profit. I mean, if I hit 50%, let me add up the numbers here. If I hit like on average 50% winners, 4.3 plus 1.95 plus 2.35, 2.86, 0.56, 1.40, 0.66, 1.85, 1.40, couple more, 211, 91, 96, and 187. Okay, so 23.18, cut that in half. I mean, if I hit my 50% profit targets on a majority of these trades, I'm making about $1,200 on a one contract trade. That's not bad. And what's nice is I'll build these trades up. They're diversified. They have nothing to do with each other, right? The broader market doesn't have to go up for these stocks to win. The broader market doesn't have to go down for these stocks to win. The prices are going to do what the prices do. It's just a good trade, good technicals, and hopefully it's hitting some profit targets. And if I wanted to go after slightly bigger take profits, a lot of these trades are minimum 1-to-1. I mean, I could double this and try to get a little bit more aggressive on my take profit and potentially make $2,300. But that would have to be waiting all the way to expiration, which I don't tend to do that. I like to kind of manage the trades with consistent profit targets. Okay, so we're good on the bull put spread. But the reason finding trades is easy, I'll just show you that right here. So I'll show you my pinch point scanner. And we actually have a masterclass on this coming up at the top of the hour at 4 p.m. Eastern time. So when I wrap up this session for final hour, it's really simple. I'm scanning over 10,000 stocks with this screener, and I'm looking primarily at oh my gosh, we got a lot of goes today. So we priced out a handful of these. I did look at PepsiCo today. We talked about it yesterday in the masterclass. It was trading for $5.05 yesterday, and now it was up to $6.05. By the time I looked at the trade this morning, it was already trading for $1 more, so I'm not going to take the trade. That'd be a $6 debit for $4 profit because it'd be a 10 max credit. So it just didn't price out. I wanted like a 1-to-1, so I crossed that one off the list. This one I'm already in. This one I didn't like the price. This is new, so I'll put N for new. CRL, I believe that one's new. PINC, I believe that's new. Maybe we saw that one yesterday. MTG, that is new. NWS, ULS, this one's new. L is new. Post is new. This one I think we priced out yesterday. I think we priced it out yesterday. Didn't end up taking a trade. The trades that I took today, I took a trade on RARE, so rare. And I took a trade on SoFi. And I took a trade on MRK. CELH for Celsius Holdings. This one already started to move a couple of dollars. I'll go back and look at this one too. But we're gonna have a fun masterclass here at the top of the hour. We got some more activity here on the Go filter, which is good. These stocks are primed and ready to move. And then on Get Sets, we have some new ones. HPE is new. I think that's about it. These are some usual suspects I've seen the last couple of days. So taking a look at those based on volume. I might take a look at HPE today. I'll write that one down. So HPE. SoFi, I'm already in. ASTS, I might already be in that trade. Yep, I'm in that trade already. ADT, we looked at that one yesterday, didn't price out. VTRS, I am not in that trade. I priced it out, didn't like it. MRK, I'm in that trade. Walmart, priced it out, didn't like it. Comcast, priced it out, didn't like it. I'm going to look at CELH right now. So Celsius Holdings. So my pinch point scanner will do a lot of stuff. It, number one, finds great trades for me. On top of that, it gives me a nice little algo-generated trade idea based on technicals and fundamentals. You've got the monthly trading range, the suggested strike price, and expiration if you want to just simply take like an option trade, expect a monthly move. And so what I do is I just go one step further and then go into my charts and see, okay, let's go to CELH. Okay, we're starting to make a move. It's at $40. We literally talked about this one yesterday at the close. So yesterday, CELH is trading around 39. It's up about $1 today. Yep, $1.01, so about 2.58%. It still has a potential move. Let's check this one on the chain. So no earnings from what I can see. Earnings are way out here into August. So if I'm looking out like 40 to 50 days, this would be July 18. So could I do a 37 by 42? That's not bad. That's not bad. I pay $245 to make $255. That's not bad. If I went 35 by 45, I pay $494 to make. So can we go $5? And if I look at the stock price, we are at this is the good and the bad. Okay, look at price action here. See how we've gone up, down, up, down, up. If I buy it right now, I feel like this stock, obviously it can take off and go up, and that's profit potential. I almost feel like it's better if price were to pull back first, then we look at a bull call spread, right? So unless this thing is finally getting the confirmations to start to go a little bit more, parabolic in a way, which it could. Let me see something on, let me take a look. So CELH. Yeah, it's still ready to go. Do I like it enough to take the trade? We could pull back to 35. 35 would be, essentially this would wipe out my trade. If I did a 37 by 42, I mean, that's not bad. If we pulled back and lose, I mean, that's reducing the risk. If we continue to go higher and get above, we're expecting $5 from current price. That'd put us up to 45. That'd put me greater than 42.50, which helps his debit spread. Let's see here. I mean, worst case scenario is the thing pulls back to like 35 bucks, but I do think that overall this isn't a bullish trend. It's at least it's starting to look better. There's plenty of room to recover if we are going to continue to have some gains. So let's see. We have earnings August. Let me see how this one prices out. If I went 35 by 45, 462 to make 535. 37 by 42.50. This one's a little bit cheaper. I can risk 212 to make 288. We just have to get above 42. This one I wait a little bit longer though. Question. There's enough time in this trade. I think this one's pretty good. Break even's around 40 bucks. So if price goes sideways, we still make money. Price goes up, we make money. I'm going to take this trade on CELH with pinch point. I like the trade. I'll go out at far enough time. This should take earnings into consideration, or maybe we're just missing earnings. Right here, earnings are showing the 12th. So that week that I'd be trading on the 15th, if we have a positive earnings print, then we can easily get this trade. So I'm going to go, let's hopefully no more than 225. I'm going to go 220 debit. I'm going to take which one makes me more bang for my buck? So this one's $1.05 risk to make $1.45. So $1.45 over 105. Let's do the math. So 145 over 105, that's 138% return on risk. This one is a 275 over 225. 275 over 225, that's 122. So the better trade, but you are going at the money here. 40 by 42.50, I need price to go up $1. Okay, this trade, I need price to basically stay where it is. So see how it just got a little bit more expensive though? It's kind of annoying. This trade's just under a 1-to-1. This trade is just over a 1-to-1. Let's see. I'm going to take this trade here. See if I can get like 235. It probably won't fill because I'm asking under the mid, which is rare, but let's see what we get. 235 out to August. Fill to 235. Okay, that trade's in. So pinch point, new trade. I'm going to put this in Telegram for the trade room. This is trade number 14, CELH. I'm doing an 8:15 expiration. Okay, so 8:15 expiration. I'm buying the 37.50 call. I'm selling the 42.50 call, and that's a 235 debit. So 235 debit to make $5. I'm going to go ahead and set the take profit on it right now. If we go CELH here, label this for old pinch, and I'm going to set the take profit. So I paid 235. I'm going to go after a 352 credit. So 352 credit. So if we go a little bit higher, this will be pretty easy to hit. We got price moving higher. This should be able to hit that credit. Okay, so let me get this one issued in the trade room. Pinch point. CELH, 8:15 expiration. Buying the 37.50 call, selling the 42.50 call, 235 debit. Okay, trade is in. All right, what else do we have here? Micron stock, I'll take a look. Thoughts on Roblox? Price target is 100. Okay, I mean, the user base on Roblox has always been pretty impressive. I can take a look at that. So Micron, Roblox. Tasty Trade tells me that RAR is locked for closing trades only. Larry, you might be able to contact Tasty and see if they can whitelist you for that one. I've had to do that before when it says closing only. If you call the trade desk, they sometimes can just like give you permission for that. I had to do that on some of my like Japanese yen trades and some of the whatever instrument it was when I saw it was like closing only. If you contact the trading desk, they can remove that. And I don't know why that is sometimes. But usually, if you contact the trade desk, they will look and see if they can remove the restriction. What up, Kevin? Back at it from Lakeland, Florida. Okay, let's have a look. I'm going to look at the ones that were thrown at me. So let's go to pinch point. Let's have a look on the old pinch point scanner. So let's go all stocks. Let's have a look at Micron. So Micron. So price has gone up from around $80 up to $100. Okay, so we don't really have anything. There's some consolidation here, maybe since May. I'll check it. I just want to see if it's giving me a good technical setup. Not really. So this one is not really primed to move. I would say Micron, if I went out for the year, I mean, $60 is pretty good. I did take some ratio spreads during the April sell-off. I'm out of the trades now. That was like an easy. I just sold puts. But when we rolled down to like 60, 70 or $60, I just sold a bunch of puts at like 55 and 50 and kind of layered into it. So, but what I'm seeing on my pinch point right now, if I go to check the analysis, does it have a trade? It's probably a no pinch. Yeah, so there's a no pinch here, which means it's not really primed to move. It's already made a move. We basically had a run from May 9th up to current price. However, I don't mind the trade, right? I mean, this is in the semiconductor space. I would say, maybe $60 if I can go out to the end of the year. Just don't know what the premium situation looks like. But if I go Micron, earnings on the 25th, I'd have to look past earnings in all honesty. I'd probably go out end of the year. And can we get something here at $60? I mean, the premium's pretty decent. If I did a ratio spread, I mean, I can make $150 on this thing. And would I be willing to own Micron? I mean, I think it's not a bad play. Like MU. I mean, there's no real risk here fundamentally. Price to earnings, not terribly expensive compared to other semiconductors. It is a little bit overvalued, however. But if I'm looking at like, well, I'd own it at $55, I mean, I'd be okay with that. So I would give myself, and this is what I've been talking about this week, is any trades that I'm considering taking, I'm actually going to do this. I'm going to set up a ratio spread on Micron, but I'm going to look for a better credit. So if we have a pullback here, I want to see what that pullback would look like and if I can get filled at a better credit. Because if I just take the trade now and I can get a dollar, let me see what the pullback would be. How many points? If we pull back into this gap, 90 to, let's just go $90. If we pull back $12. So right now we pull back $12. That would put me down to about, how far away? If I pull back there, say we go to $90. So I'd be about 20 to 30 points lower. I'll just say 25 points lower. So what's 25 points lower from current price? That would be around the 77. So I'm going to put this trade in for $3.50. So I already did this on a couple of other trades. I did this on Oracle. I did this on Lululemon. I like the trade, but I just want a better fill. Because in case, and again, I could totally miss this trade and it may not fill me. If price just goes higher, then I'm going to miss out. But if price pulls back first, okay, then I should be able to get filled with this as my, this is kind of my buffer, right? As long as you don't take out those lows. And even if we do, it's like, it's a cheap enough stock, I'd be willing to own it. This one's not too bad. So I'm going to set this trade up for like a 350 credit. I'm going to go, what are the lows here? Lows around $62. So if I went 62.50 by 60, so I can get $1.48. I'm going to put this in for $3.50 and take this trade. So this one for potential ownership, I could take this on the following accounts: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm going to take it on all these accounts right here. So I'm going to try to get filled for 350 credit. And that's a pretty big income trade. I mean, for me, it's like, okay, so I'm tying up basically $450 of buy power to make $350 of income. If I own the shares, I would try to repair it for anywhere between $250 to $500. I don't want to hold it very long. Okay. So I'm going to put this trade on for 350. This will be a pending order. All right, let's go for 350 credit pending. Okay, and they'll just move up the ladder here for all these accounts. 350, 350. So the lesson for me here is I did a lot of these trades prior to the giant March and April sell-off when volatility jumped from like 30 to 60. And even though, hang on one second, I've got to grab this phone call. I'm gonna mute my microphone. I'll be like maybe 60 seconds. Just give me 60 seconds. All right. Accounts 1, 2, 3, 4. Next up, this should be this one here. Ties up a little bit more capital, but that's okay. Working through. Okay, 2 more, and then we're good. Okay, so the reason I constructed the trade this way is because if we start to see a pullback, okay, if we see a pullback, this trade that right now is offering about $1.80 would hopefully gain in credit. I still like the level here. That's why I'm going to take the trade, but I want to see if the credits increase. So here's what happened to me in April. Now, all the trades were fine. They all worked out. I mean, the reason I set the levels the way that I did was when these were happening, like basically here's what I did. So we had all the structure over here. Okay. I saw that the markets were taking out these lows. We were dropping quickly. I put on ratio spreads here. But as price dropped another $20 very quickly, a naked put takes on essentially $2,000 of risk, right? If I sold a put at $60, the probability of getting filled and assigned at $60 was actually quite low. But the fact that we went from 90 down to 60 and change, it's like, let's just say we went to 65. Well, that's $25 a movement. That's $2,500 of risk, right, in a naked put. So if I did this on, 10 accounts, that's $25,000 in just volatility, right? So what I'm trying to do is rather than accepting like the $1.50 trade right now, I'm going to put in a credit of 350, and that way it has to take a little bit longer for me to get filled. Even if IV swells, I'm getting a better fill. It'll just reduce, the overall risk and exposure that I would have. So just a little lesson learned from that IV swell that we saw this year, and I'm just going to try to set the profits based on, current price. If we've got a percentage move away, how far is that out of the money, and then making sure that I like the level, which I do back in April. Right. So anyway, I'm going to get that trade into my tracker here. And these are trades that if I get filled on these trades, so Oracle, Lululemon, if I get filled in this one for Micron, I will put these into my project options edge service. I'm just not going to put them in as a pending order because I want to see like, okay, we got filled. Now look at the trade. So it's like if I get filled on it, then I will share it. And honestly, you'll probably get a better fill than I do. Okay, so I'm doing a 116 expiration, buying the 62.50 put, selling the $60 put for $3.50 credit. Okay, so that one's pending. All right, that was Micron. Let's take a look at RBLX. Let's go to the pinch point here, all stocks. Roblox is right there. So we've gone from 70 to about 90 just over the last month. More than likely, this is not going to be a pinch setup. Volume's pretty steady. Check and see what we have here. Let's go to Roblox. Oh my God, dude. Roblox went from $50 to $91. Son of a biscuit. I mean, that thing was a great trade at 25 bucks. I mean, I'm not chasing that thing. I don't know. I'm not that interested. No pinch, no coil, no consolidation. I see that as no trade. Not worth chasing. So it would have been, you already participated. If you bought, I mean, here's the chart. You go strong support at $25. I mean, this thing just rolled around here for a while from 25 to 30 bucks. The best opportunity you had would have been, previous highs became support. That was about it, and that was all during the craziness of April. So maybe some consolidation in here where this was support, and obviously the recovery, the market's been doing really well. It is overbought right now. I would expect to see a pullback. So, one thing I wouldn't mind doing is if we have a pullback on Roblox, maybe looking in here, draw a trend line. Maybe we got some support around like $70 to $65 if we're lucky for re-entry. So we will see. But other than that, no setup that I'm going to take on that one right now. What else? Layer, are you good? Yeah, you just have to contact the trade team to see if they'll remove that restriction for you. All right, so Pinch Point has these. We're going to talk about these again at the top of the hour masterclass just after I wrap up the session, and we'll price out some more. We got a lot here to price in. I think we got 3 or 4 more new ones to price in, which should be fun. And earnings this week. Let's see what's going on for earnings. I know we have AVGO this week. So let's just go from today to next week. I have 11 stocks. Chewy has earnings on June 11th. DocuSign has earnings on the 5th, which is tomorrow, and that's actually aftermarket. ChargePoint, which is only $1 stock. I'm not taking that one. Lululemon has earnings on the 5th, and then Dollar Tree. Okay, I'm going to try to price those out. I really haven't found a good trade for my newsbreaker service the last week. GameStop has June 10th. I mean, maybe if it's cheap enough, we'll find out. So GameStop has earnings next week. Now that they started to add Bitcoin to their treasury bill, their whatever you want to call it, they're trying to pull a Michael Saylor MicroStrategy type look. I'm curious what the broker shows for it. So GME here, earnings on the 10th, which is next week. Earnings average. Take a screenshot here. So I've got 11 stocks I'm going to look at pricing out for newsbreakers. There's a list if you want to take a screenshot. I'm not interested in all of these, but I would say of the list so far, this one's pretty sensitive. So, I mean, MDB, IoT, RH, GameStop. I mean, price-wise, like these are all decent. I would not do ChargePoint. And then Lululemon, Dollar Tree. Yeah, I mean, I'll price these out. I'll see if we have a decent one. They're all pretty earnings sensitive, which I like. Okay, so I'll price those out. Those will probably be looking for trades tomorrow. Since we're coming into the last 8 minutes of trading, I'm probably not going to sneak in a trade right now. But those are coming up. Okay. We've got 8 minutes left. 8 minutes left before the close. The heck is this from Schwab? Let me check something really quickly. All right, I've got to check something on my Schwab account really quickly. Just had a notification. Just want to make sure that it's cash secured and not tapping into margin. Okay, should be good. I think that was a lag from yesterday. All right, so I have pending orders. Pending. Okay, got it. All right, that's fine. I was looking at these, all these just orders from yesterday. So I just kind of leveled in here. I've been buying, IBIT all the way back here, had a nice little run, took some profits, leveled back in. Once we had this run, I just put a big fat Fibonacci on here and got some nice fills. So this low, this high, end up grabbing a 30 and a 50% pullback level. Those are back up to highs again. I'm maintaining those to accumulate. And then I'm looking to see, maybe we accumulate again. We come back and find inefficiency, maybe come back to 45 again. But I'm still looking for Bitcoin to still make higher highs this year. I think gold and Bitcoin are great to have in the portfolio. Bigger picture, I mean, what's kind of nuts is look at the ETF market cap. So market cap is $101 billion for GLD. Okay, $101 billion. That's AUM for GLD. If you go to IBIT, we're at 68. I am curious if Bitcoin is going to overtake gold at some point in the next 5 years, where just this ETF alone overtakes GLD. If that is the case, then other than having, Mag 7 as your top 3 or top 4, like Bitcoin would be like fourth in the world, like largest market cap, or I should say, AUM. But I'm trying to think market cap of Bitcoin. What is BTC USD? $2.21 trillion. If I go to gold, I don't know if I have a market cap on gold as an asset, but anyway, future stuff, yeah. So good on Schwab. I can get rid of that. Got some option prices for my newsbreaker service. Very good. Let's see what price gives us tomorrow. Hopefully we can head back up towards the 59.95, 6,000 level. Took a nice little butterfly spread this morning. That ended up closing out. I took it yesterday for my double up service. We closed out for 220% today. We just kind of hung out around this 59.90. The best part is I didn't even. Well, I guess I did have a pin price. It was pinned at 59.90. So we hit this level all day today, and it was a 25-cent debit. Closed it out for 80 cents today. So that was a 220% winner, which is not too shabby. I'll take that dub, and then we're 7 for 7 on some intraday trades this week on SPX. All right, we have about 4 minutes left. Flat on the day. SPX is 0.03, NDX 0.27, Q's 0.3. Dow is actually down in the day slightly. We're breaking those lows just here in this last few minutes. Russell is also down. So we started off down on the day for Russell, and we haven't quite broken the lows, but really just a choppy day thus far. Volatility kind of flat on the day. Move index. Let's go to the, let me just move this back up to SPX. There. Let's go move. So move has come down a long ways. This was crazy amounts of bond volatility that we had back in April. What's fun? Look at this thing, man. This market is within 2 to 3% of all-time highs, and SVXY is just dead. I mean, I like to trade SVXY when we have a big move up. I'll put it the other way. When we have a big move up in the VIX, Okay, I like to buy or sell puts on SVXY. You don't get any. You can't really use leverage. You can't use margin. It's cash only. So if I sell a put at $38, it's going to take $3,800 in buying power. But it's pretty safe if you buy shares. The reversion of the VIX tends to give you some nice gains on SVXY. So I did that here in the July to August dip last year. That worked out really well. I did that here in April. And this one I ended up getting about $6 a share. This one I got about $3 a share. It was just a quick turn. So $600. I bought 100 shares, $600, $300 return. It's okay. But I'm surprised that the market still melts up and the SVXY has stayed exactly the same. So I mean, you got to be in and out pretty quickly, timing that kind of volatility spike. But this is a pretty easy way to get it and get that reversion. There'd be some serious. I mean, would there be though, Lee? GLD, look, if there's a comparison where you go to the amount of time it took to get GLD ETF, it took Bitcoin when it launched IBIT, when BlackRock launched IBIT, which is a securitized spot exchange ETF based on Bitcoin's price. It took a year for IBIT to have more AUM than GLD. It took a year, and it's already gone greater than GLD. So serious resistance? I don't know. I don't think so. I think right now, like Bitcoin is in a serious conversation as I think it's gaining more and more traction as a hedge against the global fiat system. So is gold, right? Like gold's always been a store of value and always been an asset. And gold has obviously been in a great 2 to 3 year bull market. But Bitcoin has come a long ways in a short amount of time. Look, I'm not like some crazy maximalist here on Bitcoin, but as a trader, there's not a lot of opportunities to see this much asymmetry. If I can manage risk on Bitcoin, then I think it is worth having in the portfolio. But it didn't take long for IBIT to be introduced and then actually have more inflows than GLD. It took a year to what this took like 8 years to create, inflow wise. Understand that, yes, there's a lot more dollars to go around and we flooded the system, but Bitcoin is essentially representing Web 3.0, future AI, digital decentralization, blah, blah, blah. But it's also a bit of a hedge against or it's a hedge against the fiat system that is kind of a systemic risk. So anyway, I mean, there's purists and maximalists either way. That's not me. I mean, I think both of them collectively, it's like I'd like to have gold in my portfolio. I'd like to have Bitcoin in my portfolio. I don't think there's anything wrong with that. So anyway, we'll see. So it's closing bell. I'm going to wrap up here in just a few minutes. Jump over to my masterclass for pinch point, and we'll have another. I think this is masterclass number 6 today. So we did Wednesday, Thursday, Friday last week, Monday, Tuesday, Wednesday. So today will be number 6. And looking forward to being in class. Everybody's trying to find a couple of trades. Newsbreakers, I've got some work to do. Hopefully tomorrow, find a couple of trades we can sprinkle in for this week or next week. Double up. I'll keep finding some short-term opportunities. Daily profit play will keep grinding, and we'll see what tomorrow brings. So we still have some levels up here. This has, let me go to the SPY and see if this has been growing or shrinking for the day. So the SPY still has, it's still up there. I mean, we have seen this liquidity level grow for the day. I mean, I think this is still valid to see, okay, so up, down, up, down, up, down. I mean, if it stays here for the day, are we going to oscillate again tomorrow? Are we going to stay sideways through Thursday and try to get a pop up here for Friday with non-farm? I don't know, right? But today was a pretty quiet day overall. We closed here and we pretty much stayed right there for the day. So very flat on the day. It might have actually trickled into negative at the close. So let's go to the tape here. So SPX is flat, SPY is down negative 0.03, NDX is up, Qs are up, Dow is down, Russell is down. So kind of mixed. Let's look at the heat map really quickly before we go. 58% advancing, 38% declining. What are your winners today? Meta up, Netflix up, Eli Lilly up, Broadcom up. Semiconductors again getting some love. Palantir down, Tesla down. Interesting. I mean, you got some red. Utilities down, energy down. Let's take a look at performance on sectors just for today. So this is today. Maybe this is yesterday's close. Maybe energy way down though. Wow. Did oil take a crap today? Not really. It's down 0.59%, but sector looking pretty harsh. Utilities down today quite a bit. Year to date, still up. Industrials leading the way, utilities leading the way, financials leading the way, consumer staples leading the way. Communication services is mainly made up of, we've talked about this, it was what? Look at the weight here. Meta, Google, Netflix is like 40% of this sector. So it's just crazy how much is in those few companies. But industrials, I mean, it's just sectors are heavily weighted towards kind of the top performers. But anyway, okay. That'll do it for today's little final hour session. I appreciate you being here. Whether you're watching on YouTube.com/Chris Pulver or YouTube.com/Financial Wars, click that thumbs up button. Subscribe to the channels if you have not. We're here almost every single day. Check out the other content on the channels. I get a lot of questions. What other videos do you have? Check out my channel. I've got videos on support, resistance, price action, winning trades, equity management, risk taking, all these different assets, options, forex, stocks, filtering, indicators. So feel free to explore, but we'll be here almost every single day live for the final hour. And thanks for being here. All right, if you're in my pinch point masterclass, let's start that class up here in just a couple minutes, and we'll fire through and try to find some trades. All right, cool, everybody. See you in a little bit. Thanks, bye.